This is one that we hear, and it makes us sad every time we hear it, and yet it keeps not changing. 57% of Americans can't come up with $1,000 in an emergency. This is where if you were sitting in a room of someone speaking, you say, hey, look to the person to your left, look to the person to your right. One of those two folks can't come up with $1,000. That is not a great place to be from a financial standpoint.
By the way, you don't only have to look to the right.
Well, either you or that person.
Here's the thing I think is interesting. Let's give it a little positive. This is you pretty much can set your clock to 60% of Americans can come up with $1,000. 57, we have had a slight improvement historically. I'm thinking we're probably going closer to 60%. This also ties in, and we didn't turn this in a slide. It's been making the rounds on socials the last few days, but it's something I just wanted to point out. 51% of Americans. Only 51% of Americans have more savings than they do credit card debt.
That's awful. That's someone who doesn't understand how money works, how debt works.
Lots of paycheck to paycheck folks out there in the American economy.
And so what do you take away from this? What's the thing that you can glean to say, okay, how do I use this stat? Well, the emergency fund, the money that you keep in savings, the money, is the barrier that exists between you and the unknowns in your life. So if you do not have that, if you do not have that critical part that keeps your life out of the ditch, you're probably doing it wrong. And it's so important, Brian. We make it one of the very first things we think people should focus on.
Yeah, and that's why if you go to moneyguy.com/resources, in the financial order of operations, number one is deductibles covered. And I'm going to go more specific. Your highest deductible needs to be covered because this is what's going to keep you from taking your financial life running it into the ditch and then never recovering. If you look at how many bankruptcies are caused by medical problems or other big things that you're just not planning for, you'll never get out of the financial gates of building wealth and success unless you can at least cover those speed bumps that might come your way right in the beginning of the process.
All right, Brian, well, you just said 51% of Americans, or only 51% of Americans have more in savings than they have in credit card debt. So that means that potentially we have a credit card problem in this country. That leads to our second mind-blowing money stat that over 1/3 of Americans carry a credit card balance month to month. 1 out of 3 says, you know what, I'm not going to pay this off every monthly. I'm going to buy something today, and rather than pay for it at the end of the month, I'm going to carry that balance over and over and over and over and over again.
Yeah, credit cards are one of those things where it really is a binary decision. It's a 0 or 1 in the fact that if you can pay it off every month, credit card use is okay. But as soon as you start running into credit card debt, it really is a no-way situation because that is blowing up your financial life and you're using compounding interest actually against you. You're turning a powerful force for the good into something that is quickly, I don't even have to say slow, destroying your life in a very fast process. And we even had some stats that took a little bit more on this. Bo, if you look at this, credit card debt now is over $1 trillion.
I mean, so it's not. This is not a small problem. $1 trillion of credit card debt is a big, significant problem that still exists in this country.
And listen, this is. I think there's some deniability on this because people are just embarrassed about it. 21% of people don't know if they even have credit card debt. Come on.
21% of people don't want to admit that they have credit card debt.
That's exactly right. 43% don't know the interest rate they're being charged. I'm actually surprised that number is that low. I bet a lot of people don't know the interest rate they're paying. By the way, it's probably over 20%. 69% don't understand how compounding interest works. So, I mean, these are the problems and why people are lured into these situations where, so I just tell you, back to the binary decision. If you're not paying your credit card off every month, you just might not be a credit card type person and just stay the heck away from it.
And so what's the takeaway here? You have to know your numbers. You have to understand, how does this work? What is my income coming in? What is my outflow going out? And I need to learn how to budget, because if I'm racking up credit card debt, that means that I am living beyond my means. I am robbing from my future self to pay for myself today, and you're not doing it right. Because compound interest, it can be your favorite ally or it can be your fiercest adversary, and you want to make sure that you don't let it start working against you.
Do you smell that, Bo? I think I smell a case study coming on.
A case study coming on.
Because I think we love showing the numbers so you can actually see. Because this is, if you're thinking about the incremental decision of act like the average American where I'm running and using credit cards the wrong way, or I'm thinking like a financial mutant and I'm actually, instead of spending and running this debt and using, compounding interest against me, Let's see what that difference looks like.
So think about this. Right now, the average credit card balance in the United States is just under $6,000. It's $5,910. Well, if you were to make the minimum payment on that, which comes out to about 2% of the outstanding balance, you'd be paying $118 per month to try to get that debt paid off. And if you did not incur any additional debt, you'd have it paid off right around 9.5 years.
That's so sad.
Well, over that 9.5 year period, that $5,900 of debt actually cost you $7,661 in interest alone. So you have literally thrown money away. That is compound interest working against you. Well, what happens if you were to flip the script? What happens if you were to do it the right way? And instead, what if you took that $118 every month that you were paying the minimum payment on your credit card and you instead invested it for 9.5 years, starting at age 25, assuming a 10% annualized rate of return? Well, in the next 9.5 years, from 25 to just before your 35th birthday, that money will have turned into $22,000. So instead of paying off a $6,000 debt, now you have $22,000 saved up. But that's only part of the story,
Yeah,
right?
because think about this. There's also, that's just the first 10 years that we've had this going on. What happens the rest of the time if that money continues to work?
That's right. If you just, without saving another dollar, if you just let that $22,000 continue to grow all the way till retirement, all the way out till age 65, and if we assume a 10% rate of return, that one decision not to incur that credit card debt, not have to make that $118 payment, could actually lead to almost $500,000 in retirement, $466,000 in retirement. It matters. Let compound interest work for you, not against you.
And don't fall into the mental trap that people think just because you're getting a 2% cash reward on your credit card use.
That's a great point.
I mean, because we love credit card rewards, don't get us wrong. But if that 2% is not going to overcome the plus 20% interest rate that credit cards carry for them. So like I said, if you're carrying any balance on a credit card debt, get out of it, because it's credit card use is okay. Credit card debt, no way. Live by that.